usstrategy.com.
Hi, this is Chris, taking a look at the upcoming Thursday, August 28th trading session. In front of you, I have the economic calendar, and right away we have a couple things to pay attention to. The Spanish GDP won't be a massive market mover, but it is something to pay attention to in the sense that it is the fourth largest economy in Europe. After that, though, we have a couple things that we really need to pay attention to. German unemployment change is anticipated to come out at negative 5,000. Something better than that could give a little bit of a reprieve for the euro and the DAX, perhaps. German unemployment rate is supposed to be 6.7. Forecast, we'll see. The DAX does look like it's ready for a little bit of a pullback, though. Quite frankly, it's a bullish market, but it ran into a bit of a brick wall at 9,600, as you'll see on the chart. As we go later into the day, really not a whole lot in Europe that gets us too excited. We have PPI out of South Africa, which of course won't move the markets much beyond the rand itself. We go a little bit later, and then one of the things that we'll be paying attention to is the German CPI numbers month over month. It's a preliminary number. It's anticipated to come out at 0.2%. This should affect the DAX and the euro itself. The euro did get a little bit of a reprieve during the day on Wednesday, so the question then becomes, can it continue, or will the sellers have their way? Later, we have the quarter-over-quarter GDP numbers preliminary out of the United States. 3.9% is anticipated. This will have an effect on stock markets. The S&P fell during the day, but found support below and formed a hammer on Wednesday. This could be the catalyst to finally break out to the upside. Nonetheless, right now, it looks like we could be range-bound, but this is a number that could change things. Initial jobless claims, of course, will have an effect as well at 300,000, but for my money, tomorrow GDP is probably going to be a little bit more important. As we go later into the day, we have nat gas storage. That, of course, affects nat gas only, but if you are trading that, you may want to pay attention. The core CPI, the Tokyo core CPI, the unemployment rate come out of Japan. I'm paying attention to industrial production month over month. 1% is the anticipated number. That can have an effect on the dollar-yen pair and the Nikkei. The dollar-yen broke out above the 103 level. I still think 103 is a floor. So if we get a little bit of a pullback, perhaps the number's a little better than anticipated and money runs in favor of Japan, give it a few minutes. We should see some buyers step in. Could be a nice kind of buy on the pullback type of situation if we get the right announcement. Okay, looking at the charts, you can see I have the DAX in front of you, and the Germans went sideways during the session on Wednesday. 9,600 euros, a little bit of a ceiling at this point. We've had a significant move higher. I think that the bullish momentum will continue, but we need to clear 9,600 in order to get into this consolidation area, which runs all the way up to about 9,900. A pullback based upon poor German numbers might give us an opportunity to buy lower. 94 looks like a floor, especially considering that that might fuel expectations of the ECB, perhaps adding more liquidity to the markets, therefore having more interest in stocks. The S&P 500 in the United States, as I mentioned, pulled back. It bounced, it formed a hammer. The hammer, of course, suggests that there is buying pressure, but right now we're right at the 2,000 region, and I think we may go sideways. A better than anticipated CPI number could put us above the 2005 mark, and that would have us going higher. Pullbacks at this point in time should find plenty of buyers underneath. Looking at the euro dollar, you can see we did get that little bit of a pop, but really at 132, there is a significant amount of resistance, and most certainly at 133. So until we get above 1.33, I have no interest in buying this market. I would look at rallies as potential selling opportunities, and again, those German numbers will come in probably and move the markets one way or the other in this pair. I still think we're going to 1.30. I'm more than happy to sell at higher levels and buy the dollar on a bit of value, as it were. And then finally, looking at the dollar yen, you can see we haven't done much. Those Japanese numbers could drive us a little bit lower, but this 103 level for me is rather supportive. Any supportive candle down here gets me interested in buying the dollar over the yen, as the interest rate differential should continue to widen between the dollar and the yen denominated bonds, especially the 10-year flavor. So that being the case, I am bullish of this pair. If I get a pullback and things start running towards Japan, I'm going to let things calm down and start buying again. And with that, I've looked at the Thursday, August 28th trading session.